anything of that nature on a sales with payments coming early from our customers, that type of thing. And now we're kind of reversing it, and we're talking about how do we purchase our inventory, what are the new accounts, et cetera, and how do we compute what we call now the cost of goods sold to compute our gross profit. So let's see, let's look at one particular thing that sometimes gives everyone pause to, if I can get this to the right camera. There you go. If you have a book, I'm on page 403 talking about trade discounts. We talked about in chapter 10 about discounts that we give our customers if they pay us early, and then we have the same kind of discounts as a purchaser that if we pay early we get discounts as well. But there are some discounts, or one particular type of discount, that is never recorded in our accounting records, and it's basically a courtesy discount is what I really kind of like to call it, but the book calls it a trade discount. And so they give you a little illustration at the bottom of page 403 that if we purchase, for instance, $760 worth of merchandise, and they give us a trade discount, then our real cost of that merchandise is $684. 10% off of $760 would give us $684, and that would be the amount of the purchase that we'd record in our records, not the $760. Now, off of that $684, the amount that we actually negotiate with the vendor, we may have also a cash discount available, 2%, 1%, depending on when we pay or if they offer such a discount. The main thing I wanted to bring up at this point was that trade discounts are never recorded on the books. They are just a courtesy that goes on between us, say a merchandiser, and purchasing from, say, a particular vendor that sells candles. Well, if we purchase so many candles, we'll give you this special price. If you purchase even more candles, we'll give you another special price. And those are what we refer to as trade discounts. So the book does a pretty decent job describing all of that. Okay, the next page, or the next thing that we need to talk about are the new accounts that have been added to this particular chapter, and there's 4 new accounts. One is purchases. The first one is purchases, rather, and this is an expense account with a normal debit balance. When we purchase merchandise, we will debit an account called purchases, and this is merchandise for resale, not supplies for the supply room. This is merchandise that we do plan on reselling. We will debit purchases as an expense account. If we happen to return some of that merchandise, we will use a contra expense account called purchase returns and allowances. So it has a normal credit balance, as you see there, my little notes. If we get a purchase discount for paying early or adhering to different requirements by the vendor, then we get a purchase discount. It also is a contra expense account, so it has a normal credit balance. And then freight in is an expense account with a normal debit balance. And freight in describes the amount of transportation charges that we as the purchaser of that merchandise must pay to get the merchandise to our location. So freight in is a cost to all vendors, or excuse me, to all retailers to get the merchandise to their place of sale, so to speak. And as, of course, it's all over the news, that freight in is really taking a jump in cost, and of course, what is the retailer going to do to recapture that increased freight? Any guesses?
Costs are always passed on to the consumer.
Exactly.
Corporations do not pay taxes. We pay their taxes.
Yeah. So the freight that we have to pay to get our merchandise to our location, that is a cost of the good, which again we will pass on ultimately to the consumer through the sales price. So then the book goes through the different accounts and showing you some transactions in them, and we'll get to that in just a second with an actual problem. But there's one particular page I really wanted to go over, a couple pages rather. Page 408, when you get to your textbook or your homework online, let's look at two really big phrases: gross profit or gross margin. All businesses want to know their gross profit or their gross margin before they ever start calculating all kinds of different costs beyond that. Because the main cost to a retailer is the cost of the merchandise that they're going to sell. That's their biggest expense. So we have to sell a certain amount of goods first before we ever, of course, have any profit. But remember from Chapter 10, we also have to subtract any sales discounts or any sales returns and allowances from those sales, and that gives us a figure called net sales. In other words, we may sell $5 million worth of merchandise during the year, but if we had to provide discounts to our customers for early payments or just for maybe a volume discount, giving them some extra dollars back at the end of the year, or if we allow our customers to return merchandise, then all of that is deducted from sales to compute what we call net sales. As we talked about last week, net in any kind of math or accounting class means that we've deducted something from something else. So our net sales is our starting point. This is what we have to go from that we sold. Those were all of our revenues. Now, how much did those revenues cost us just to get our hands on them? And that's where the gross profit or gross margin computation comes in. And so this is the book gives it a little bit different presentation possibly, but the main factor is that we have the cost of goods sold that must be computed and deducted from net sales to get to gross margin. Let me back up here just a second and give you this little formula. Gross profit equals net sales minus cost of goods sold, COGS. So our gross profit is a very simple calculation. Net sales, which we compute here, it's a formula within the formula, and then cost of goods sold is going to be a formula within the formula. Whatever we can sell and net in our pocket from those sales, less what that good cost us, is our gross profit or our gross margin. Both of them mean exactly the same thing. And that's where companies use gross profit and gross margin to start predicting their costs in other areas that aren't necessarily tied directly to the cost of the good, such as rent, utilities, salaries, wages, insurance. All of those things have to be paid out of gross profit. If there's not enough gross profit to cover all those things, then they need to go back to square one and start figuring out, do I need to raise the price of my goods, or do I need to start getting rid of some goods possibly that aren't selling at the price that we need them to sell, that type of thing. So let's look at cost of goods sold. Like we said, cost of goods sold is a formula all within itself, and it starts with purchases. But if we send some of our purchases back, we will deduct purchase returns and allowances, because we have the opportunity to send back defective merchandise as well. We can subtract purchase discounts. And we will add freight in. That is a cost of purchasing our merchandise. Oh, and I forgot one thing. We actually start with beginning inventory. If we had any beginning inventory at the beginning of the year, those are, of course, available to sell this year. So beginning inventory plus purchases, minus purchase returns, minus purchase discounts, plus freight in, and then minus any inventory that we have at the end of the year. Once we add and subtract all of these items together, we get the cost of the goods that we're selling, cost of goods sold. So it's like what's on the shelves at the beginning of the year, we could sell that. But of course it had dollars attached to it. But if we buy any more inventory during the year, we could sell that as well. But of course if we return it or get a discount, then that reduces our cost of what we're purchasing. But freight is a big one, of course. It's going to add dollars to our cost of goods sold. Subtract out our ending inventory, we get eventually to cost of goods sold. So again, eventually, net sales minus cost of goods sold equals gross profit. Okay, so any questions on just the basic outline of what we're looking at there? Okay, so let's put some numbers to it, and that makes it a little bit simpler to understand as well. In your book or on your homework, you probably are seeing exercise 4A. And just to avoid the confusion that the computer-generated part of it looks like, it's basically computing gross profit for a particular company. And this was for Fluter Hardware. And they told you that sales were $120,000 for the year. But they did have some sales returns and allowances, so we deduct that from sales to eventually get to net sales. And those were $900 for the year. And they did also have some sales discounts for the year, and those were $650. So the first thing we need to compute is what were their net sales. So we had $118,450 in net sales for the hardware store for the year. But the ultimate question was, what is the cost of goods sold? So we have to compute now what were, the gross profit. So we first have to start off in computing what were the cost of goods sold that we'll be subtracting from net sales. So merchandise inventory at the beginning of the year, that's where we're going to start. Beginning inventory is $35,000. Then we'll add purchases for the year, which was $77,600. But we'll subtract purchase returns and allowances, which was $4,100. We'll subtract purchase discount, which were $2,300. And we'll add freight in, which was $1,250. And we'll subtract out ending inventory. If it's there at the end of the year, then obviously we didn't sell it. And that was $32,000. Okay? So, adding all those up. I got $75,450. The check it. One more time. $75,450. So my my gross profit is going to be $118,450 minus $75,450. In other words, net sales minus cost of goods sold equals gross profit. So gross profit is $43,000.
Yeah, and the woke people of this country think that business owners and corporations make so much money.
Yeah. Yeah, once you start deducting all those costs from, once you sell it, you still have to, of course, pay for what you just sold, and then that leaves this particular company $43,000 to cover salaries, rent, insurance, utilities, the list goes on and on and on. So, unless you've been in business, you truly would be surprised at the cost of doing business. So, okay, so that is just a quick synopsis on cost of goods sold and computing net sales, that type of thing. And the rest of it was primarily journal entries and just setting up using the new accounts that we talked about. Anyone have had a chance to read Chapter 11 and work through any of them? I know with Thanksgiving it got really crazy. But this one is a big question that comes up in the homework usually, and it is usually the most confusing. The book does a pretty decent job of going through the journal entries for you. This is probably, of all the chapters, has the least amount of complexity to it and the least amount of assignments usually in the homework part. So that's kind of.
It doesn't seem like there's a lot of, in this chapter for the homework, a lot of debiting and crediting, and where does this go, and what account does this go to? There's not a lot of that, is there?
No.
Huh.
And they're really straightforward on the purchasing of merchandise. It goes into purchases and it comes out of purchases.
It's more real life, or more, that's not right, accounting is real
Yeah,
life.
it's more
More-
practical.
Practicum, okay.
Yeah. It's, these last two chapters, most people find them to 10 and 11 to be the easiest of all the chapters of this course. Of course, it's all relative to how much you read it and how much you look at it, so. But the good news is that you've got your exam over 10, 11 is not gonna be tomorrow, just the homework and the assignments. So we will have another week if, once you get through all of your homework and stuff. Next week, if you've got questions on, 10 and 11, we will have time to look, I think I just had that scheduled somewhere, so pretty sure that. Yeah, exam over 10 and 11 is gonna be on, December 7th. So you still have a little time to get through here and work the homework and all that kind of stuff. And then the final will be, Monday, the 13th, the only thing that's been due, not on a Tuesday. And it is comprehensive, but the best way is to go back through your homeworks and stuff and look back over all of it. And that you get 2 times on the final too, I believe. So, and it's only 50 points. Some people won't even take the final. If they're happy with their grade, you don't even have to take the final. So. Y'all have any questions? Okay.
So you're just saying, even if you decide not to take the final, it's not deducted from your whole grade?
Right, it's only 50 points out of the
If
entire.
a person has a 93 and they just don't wanna do it, or something like that, I'm just
Yeah.
talking about.
Yeah.
That's a lot nicer than my other classes.
Huh?
That's a lot nicer than my other classes,
Yeah,
where it's like 10% of your grade.
right. Yeah, this is, I have it somewhere in your syllabus, the percentage, but it's like less than 5% or less than 2%, I can't remember. Well, I can tell you the exact percentage, because there's only 1,550 possible points for the semester, and it's 3% of your grade, so. And of course, those of you that have been here over time, I'm gonna adjust a little bit anyway, so.
Okay, thank you.
All of y'all sitting in here are in good shape.
Thank you.
So unless y'all have something else, I say, just go get started on the homework or whatever you wanna do. It's a pretty day outside. It's probably gonna be changing, I would presume. I don't know, I've looked at
Is
that.
it just me? It seems like I'm just more burned out.
I'm burned out today because we just got back in town last night and we shouldn't have done that. So, you're a good company. All right, y'all have a good Monday.
You too.
I actually wanted to talk to you about my teacher.
Uh-huh. Okay.
I wanna do the 4 years, but I'm kinda just like, I don't exactly know what to go for. Like,
Mhm.
of course accounting, but you know how there's different things that I can accomplish. I was just wondering, like, is it best to go for the bachelor's, or like in your,
Well, I mean, you've always got more opportunities and more
Yeah.
education. You have, you live in Lubbock and plan on staying in Lubbock?
yeah, unless something else happens, but other than that, yeah.
I mean, sometimes an associate's degree will get your foot in the door and then they'll help pay for school if you wanna continue on, you know, that type of thing. So I think it'd be better to finish the associate's degree personally.
Yeah.
And then, and then work in the field and make sure that's exactly what you wanna do. And then, whoever you're working for usually will encourage you to proceed
Yeah.
and help. There's lots of places in town that help send you to school, so,
Oh, that's cool.
kind of a, I don't know what they call it, not work study, but, educational opportunity, something like that.
Oh, I didn't know that.
So, there are some places in town that do that.
Okay, cool.
It's a great
Well,
way to get it paid for, and work it out on their time too,
Yeah,
while you're working,
cool, I'll look into that.
yeah.
Okay.
All right.
Thank you.
Did you get your schedule worked out on the online?
Yes,
1304.
I think I'm doing Tuesdays at 10, something like that. Next Thursday, with you.
Okay, that one probably won't make,
What?
that class. That's the one I told you that you need to sign up on the online 1304 class. You want me to look at your schedule when I get back to my office?
Yeah, 'cause I mean, well, yeah, but she, that's the only one, or was it Thursday? No, she said Tuesday. Which day did you tell me?
Well, there's one on the schedule, but it never makes, and that was my caution to you. You probably just need to go ahead and sign up for the online only class.
Oh, okay, so it's just on, well, she said it was a hybrid.
Right, but that, it never makes.
Okay, so what do you want me to turn?
Well, I can go ahead and look at it for you. Tell me your name again, your full name?
Yvette Rodriguez. YZ. And then Rodriguez. And then it's hyphenated Castillo.
Okay, let me go in there and look up and see what you signed up for, and,
Okay.
because right now, I think you're probably the only one in the class,
Okay.
and that means it's just not gonna make. So, that's the problem.
Oh, that makes sense. Okay, yeah, I guess just email me or, yeah.
Yeah, and I can switch it around for you to be in the one that I know is gonna make.
Oh, you can switch it, okay.
Yeah.
Okay, that sounds good, okay.
Okay, thank you.
you.
Annabelle, did you have any questions? Okay.